Welcome to the Jupiter Joe Money Show. I'm Jenny Thomas, your host, and we have Jupiter Joe, our host of the Jupiter Joe Money Show. And today is the rate show.
That's right.
And why rates matter.
Rates do matter.
Big time.
Yeah. So it's funny, off mic, we were kidding each other and we were going to call it the rate show. And when I was a kid, we used to watch movies on one channel. There was only like it was only like 4 channels or something, right?
The little switch thing.
Yeah, a little switch, you turn it. And the first it was the Late Show. Then it was the Late Show. Then it was the Late Show for anybody who wanted to really like pass out and fall asleep. And you'd watch all these crazy movies all in a row. It was like old day streaming back then.
Oh, yeah.
Yeah, like in the old days, that's how you streamed. You'd watch one channel. You didn't even know you had no idea what the movie was even about. Sometimes you did. It was a Western on or a murder mystery or some stupid thing like that. But it was kind of fun.
So the rate show, we're going to talk about some fixed rates.
Yeah, I think here's the deal. So a lot of people are calling us because they're going to their local bank and they're finding out that the banks, well, this is interesting. One client came in and said, "Hey, Joe, my renewal, I was getting 4.25 and went down to 3.25. And then I went there and they told me if I don't get in tomorrow, it's going to 0.
What?
Literally. So that's why I want to talk about the rates. It's so important. Our fixed rates are really good. I mean, honestly, we were talking to Evan, who's recording us, and I was saying, rates are so good right now for us. Our rates are actually hedging up. They're not going down because even though interest rates are going to go down eventually, the insurance companies aren't stupid. They know that they can make money and it's good business for them to give you a better interest rate. So, our rates are somewhere between 5.25% to as high as maybe even 6%. But I know I've got 5.75. I know I have some 6s out there. We just have to shop for it. It has to be right for you, that particular product. But think about it. If you're not getting 5% right now, we're going to give you 5% on your money. So if you have a CD, a high yield saving that's not so high yield anymore, now is the time to shop with us with interest rates because our rates are good and you can lock that rate in for a period of time. It's funny. It was almost like I was telling the guy what was going on. They called me. He goes, Joe, he goes, these banks don't have anything past 6 months. You know why they don't want to lock you past 6 months? Because they don't want to give you interest past 6 months. It's a teaser rate. They want to get you in and then move you to one of their financial products. And the gentleman we had in, just another one, he said to me, he said, it's kind of weird how hard they're pushing. And it's a deal. They want to make a deal with you, get you in, and then get you to move your money over into stocks, bonds, and mutual funds,
So if you're not really keeping track of what your money's doing, what interest rate it's getting at the bank or in a money market, then you really need to find out what you're getting for real.
Yeah, and now is the time to take advantage of these rates that we offer through our fixed annuities. These are called MIGAs, multi-year guarantee annuities. Okay, and you can Google it, and you've done a lot of research this week about this, and we have found that our rates are staggering compared to some of these banks. I mean, think about it. Let's talk it out right now. Would you rather earn 3% or would you rather earn 5.5% or 5.75%? Guaranteed for the next 2, 3, 5 years. And by the way, our 1-year rate is not worth it. Our 1-year rate is like 4%. If you want a 1-year rate, we'll do a 1-year rate. But I'm going to tell you the best thing to do, my advice, my expertise is to tell you to lock in as long as you can that rate of interest if it's a decent rate. 2 years, 3 years, 5 years. I have younger clients coming in and locking in for 10 years at 5.5%. It's not a bad rate, 5.5. 0 risk,
Well, what's interesting is I sent you an article that was saying that there's trillions, I forget what the number is, but it's trillions.
10 trillion or something.
Dollars just sitting there in bank accounts and you're not putting your money to work.
Every day, including yesterday and the day before, I have somebody call me telling me they have money sitting in an account. I'm not talking about 5,000 or 10,000, but literally earning no interest with $100,000, $150,000, $200,000. They're waiting for something, or it's an emergency fund, or whatever you call it. And I tell people, look, just put that money to work for you. We consider that a way to make money for you immediately. I was actually doing some math just quickly. If I get you 5.75%, which is doable, very easy to get you that, on $100,000, that's $5,750 a year. Mm-hmm. In 2 years, you earned $11,500. I mean, Plus, it's compounded daily. I'm not even doing the daily compounding.
Yes.
So you're earning almost 12 grand on your money for 2 years. I mean, this is staggering. If you put in 200,000, you're going to make $11,500 a year. In 2 years, 3 years, you made $36,000. I mean, this is like big numbers, and it's no fees, no charges, no commission. The company pays me a commission out of their pocket, not yours. So your full money goes to work for you. Now, here's the biggest negative with any annuity. You have a surrender charge if you cash it in early. Mm-hmm. So if you have a 2-year annuity, don't cash it in, you won't have a fee.
Keep it there.
Yeah, if you have a 3-year rate, lock in for 3 years, don't take any money out. Now, if you need your interest, we can adjust the program to fit your needs, and we can send you interest every month. Or you can let it defer. If you let it defer, that means you don't pay tax. Mm-hmm. It's a win-win for you.
Now with the CD, you're getting your interest, and you're paying taxes on it
every year, whether you use it or not. See, that's the key to success is not paying tax on money you don't need to live off of. Now, if you need to live off it, taxes don't matter. In fact, I had a gentleman in here with Herman, our accountant guy friend, and we referred him to a client, and he came in here, he did his taxes, and he said the same thing I did to the client. He said, if you're not living off this money, why pay taxes? And that's the key to success with retirement planning. If you live off the money, pay tax. I also told this gentleman, I said, look, I'll use the name Bob. Bob, if you're paying taxes, that's not a bad thing. That means you're making money. Mm-hmm. Paying less taxes means you're making less money. That means you're living a lower lifestyle, a lower standard of living. Mm. You want to pay more taxes. Why? So you can live the lifestyle you want to live,
If you're just tuning in, this is a Jupiter Joe Money Show. We come to you each and every week, Wednesday, Thursday, 6 p.m., and also on Saturday mornings. And Jupiter Joe, he's been a retirement planning advisor for 40 years now.
Yeah.
So you know your stuff. And if you'd like to see us, actually, what our studio looks like, what our office looks like, go to YouTube. You can check us out there, see us live, and also get a copy of Jupiter Joe's book, The Retirement Know-It-All, to start with what you do and who you are.
So I was going to talk about it. I brought the book today because Evan, my son, he does all the artwork on it. It came out great. Retirement Know-It-All. And what's interesting about this book is that it's small, it's concise. It covers everything I think that's important in the financial world in about 110, 111 pages. Get a copy for free. It doesn't cost you anything. No obligation. It costs me money to send it to you. We're not like one of those companies where they go, call this number and get the free book, and then you got to pay $40 for shipping and handling. We don't do that to you. We cover everything. And why do I do that? Because I think the information that I bring to the table here is important for every American, regardless of how much money you have or you don't have. You don't have to be a billionaire to do this stuff. In fact, that's an important fact. We have some of these annuity contracts that are minimum $25,000 in most cases, and higher, of course. But we find that our sweet spot with most clients is to take care of their money that's not doing well, like their CDs, their checking account that's sitting there for an emergency that never happens. And that's what this book talks about, putting money to work for you. There's some little Joe-isms in here. By the way, Judge Judy, I think she's got a book called Judaisms or something like that. I don't know. But there's some Joe-isms in here that work. I mean, one of them here is the rich get richer because they know things other people don't know. Once you realize that, earning money and making money is knowledge. Mm-hmm. That means the more knowledgeable you are about your money, the better the money you're going to make. And the rich people have advisors that know things that other advisors don't know. And once you understand that, the level of the advice you get from somebody is going to determine how successful you are. If you're dealing with somebody that just started at the bank or the new financial company that's around the corner, and he's a nice guy, he's 30, 35, 40, I'm not coming down on age, I'm coming down on experience and knowledge. You're going to get that level of experience in your returns. Now, look, it's easy to put somebody in the market today. You push a couple of buttons, and the next thing you know, you have all your money in a mutual fund or a stock or a bond or a security of some sort or whatever they're pushing that day. And that means whatever the bank or the financial organization is pushing, not what that gentleman's pushing, because they honestly just take orders. They're an order taker, and they're told what to put the people in portfolio-wise. And we're going to talk about that. The market right now is very challenging. I know you have a lot of stuff today you want to talk about with 401ks, but be careful. The market is very volatile. I was calling it last week, and I'm going to say it again. It's kind of goofy, but fake financial news. Mm-hmm. I mean, the financial news channels are not talking about how low stocks are. I don't know, maybe they're scared Trump's going to come after them or something. I don't know what it is. But generally speaking, yes, the market will come back. But let's be honest that the market is very volatile right now. It's up and down. And there's a lot of things causing it. Iran and all kinds of stuff. We won't get into all of it. The new federal chairman that's coming in, Marsh. There's a lot of things happening right now. And it's causing uncertainty in the market. And you got to be careful with your money.
Well, especially if you're trying to retire in a couple years.
That's the point. Right. And you were talking off air about, hey, Joe, why don't you mention about carving out some of this money? If you have a 401k, you're close to retirement, you don't want to lose any more money, you want to protect some of your money, carve a piece out. Do a partial transfer. What that means is you have $300,000 in your account, and maybe this Jupiter Joe guy knows what he's talking about. Maybe I should, transition and reallocate some of my money safer with an annuity. You can put a partial amount in, or a carve out. You can take out $100,000, a little piece. You don't have to take the whole thing out. And then when you do retire, you can either keep it there or move the rest of it. Doesn't that make better sense?
It does. So for example, if you have a 401k, you roll over $100,000 mm-hmm. into the IRA, mm-hmm. and then that account is established mm-hmm. where you'll get a bonus. When you're retiring, maybe later that year, you'll still get that bonus on the money you add.
Right. So one of the things I wanted to talk about today, since you asked, a lot of people have a hard understanding of income annuities in a general sense. They say, well, Joe, how is it possible that an insurance company is going to give me a 20% or a 10%, or in this case, a 25% bonus? Well, what they do is they beef up your income bucket. So they take your money and they give you a bonus of whatever the bonus is, whether it's 5%, 10%, or in this case, 25%. They up the ante, and they're putting money in your account. As long as here's the condition, you must use it for later on income. And then they'll give you, like in this case, this is a 25% bonus up front on your money. So you put in 100, you're now at 125, and then they're giving you like 6 3/4% interest for the next 5 or 10 years, depending on how long you have it. But you must take income to make that work. So that's how this works. And one of the biggest reasons people do it is the safety. Quite honestly, they love the safety and they love the guaranteed income streams. That's a big deal.
So it's income for life. I think a lot of people don't understand forever.
Yeah. Yeah. Well, they have, look, everybody knows the term, death and taxes. Either you're going to die or you're going to pay taxes. Well, that's a certainty in life, right? Well, an annuity with an income payment is a certainty with the products we offer clients. And it means that the lifetime income benefit is forever, as long as you live. And when you pass away, your spouse, your significant other is going to get the balance, or they're going to get an income stream for life. It depends on how we set it up. And let me talk about this for a second. Everybody's different. There's nobody that walks through this door and I go, oh, you're a size 7 or you're a size 8, because it doesn't work like that. And I can't assume anything. I have to see what their needs are by uncovering it. It's called the Columbo. I'm kind of like asking questions and saying, hey, what do you think about this? And how does that work? And what's your view on that, right?
Right. So it's like, what do you want your money to do? And what do you need your money to do?
Mm-hmm.
So a lot of people have goals for that. They have a certain amount that they need for their bills, per month, per year.
Yeah.
And then how do you turn your paycheck that you're no longer getting because you're retiring and turn it into income for a long time?
If you don't have a pension from a company, maybe you work for a big company, but they don't have a pension plan. They have a 401k, right? Even the biggest companies out there in the world don't have pension plans anymore because they're cost prohibitive. It costs them a lot of money to do these. It's coming around though. It's turning around, and people are going to start having pension plans. Younger people don't realize how good a pension plan is, but there will be companies down the road that'll start doing pension plans again. So this annuity, you can tell people, look, this is your own pension. And it's mailbox money. What does mailbox money mean? It means you're going to get the money every month for the rest of your life. I was talking to a gentleman the other day, and I said, look, how long do you think you're going to live? He says, I don't know. And of course, most people underestimate. They usually go 10 years. I always hear 10, or I'm not in good shape. Maybe I'll last 10 or 15 years. But let's say you do live a long life, 20, 25, 30 years, and you're getting $30,000 a year for 30 years. That's $900,000 back on your money. On an investment maybe of $300 or $350. That's a pretty good return on your investment. So when you look at these income numbers, you have to take it over a 10, 20, 30-year period. Now, here's the other thing. If you live 15 or 20 years and you pass away, and now most wives live longer than the men, right? Let's be honest. Mm-hmm. Now they live another 10 years. They get the income for 10 years. The numbers are staggering. In fact, I show them if they live until 100, they get 4 times their money back in payments to them. That is a very big deal. This mailbox money is serious. If you haven't looked at an income annuity, let us run a proposal for you. Let us show you what we know about this stuff. It's a very big deal for somebody that doesn't have a guaranteed income stream except for Social Security to turn their 401k or their IRA or maybe cash in the bank. People don't know that either. You can take some of the cash in the bank that you have and turn that into an income. How does that work, Joe? Well, we take the money that's at your bank doing nothing. We put it in an income annuity. You get a bonus, you get interest, and then it turns into an income stream for you and your spouse for the rest of your life.
And if you become sick,
and it has an income double. But let's talk about that. I mean, now it's funny. We had a client come in the other day. They're in their 80s, and they love the fixed annuities. They just want fixed rates. And I said, and the wife or the husband said, Joe, what if we get sick? And I said, well, that's the key to this stuff. You don't know if you're going to get sick. Now, it's great to earn interest, but it's better to be prepared if that stuff happens. And we have products with these income doublers. Not only does it give you income for life, but it guarantees that if you ever do get sick, you're going to double your income for 5 years. Most of them work. So this stuff is important. The reason I'm kind of jacked up on this stuff today is because, well, I mean, and I'm talking a lot, but I want to explain that these things are extremely important. If you're just coming to our channel, you're just starting to listen to us, there's a reason you should. And that's because we know about this stuff, quite honestly. I'll pat myself on the back for a minute here. The level of experience that we bring to the table is extremely important. And when you talk with us, it doesn't cost you money. Yeah, I could charge a fee. We could restructure our business where we don't sell any products and we literally just sell you on using us to help you find the retirement plan that's right for you. But we don't do that. We actually help you find it. We give you the advice. And then if you decide to do what we recommend, you're going to be in a better situation than you would if you do nothing, right?
Take action now. Give Jupiter Joe a call, 561-743-0999. Go to jupiterjoe.com. You can book your free phone appointment or an office appointment.
Yeah. And get a copy of my book. I mean, The Retirement Know-It-All. It's free. It doesn't cost you anything. And the reason, I'm pushing the book, we got a whole new batch of these. And this is funny, but I don't know if you know this, Jenny. Maybe you do or maybe you don't. I've never sold one copy to anybody. Ever. In fact, I've had people over the years say to me, by the way, we used to get a lot of investment advisors who would try to get my book, and I look, if you write your own book, if you're a financial advisor and you don't know about this stuff, well, that's your problem. You gotta study. But I would say to anybody out there, the reason we do this is because I want you to have the information that the rich people have. This is the same information. You talk about Warren Buffett. It's in here about why Warren Buffett pays less taxes than his secretary, because they know how to. And they have advisors that know how to. If you have an advisor that can, we get calls for everything from Joe, who do you recommend to do my taxes, to, hey, who did your pool? Right?
Yes.
So we get it all. And I value that and I respect that because, I always try to call somebody or talk to somebody that can educate me. Now, it might sound stupid or corny, but it's not. I mean, the people who you can go, look, everybody has a brother-in-law. Now, I just heard this. I just got to tell this story. I had a guy yesterday call me. He said, I've got X number of dollars sitting in my checking account. And I said, really? And he says, yeah. And we talked about some other money he might do. And he said to me, Joe, I have this brother-in-law and he's very successful. Now, here's how he equated his success. He drives a car that's $200,000. And I said, that's great. He said, I'm going to give him $100,000 or $150,000 from my checking account and see what he can do with it. I said, what credentials is it? He doesn't have any credentials. He just makes money. And I go, well, how's he gonna make money for you? He says, I don't know, but he's very successful. And I said, that's great, but I said, shouldn't you be careful? He says, yeah. He said, this guy had lost some money. I said, that's who you're going to go to. So you have to, having money and keeping money are two different things, and making money are two different things, and losing money. I'd rather play it safe at 60 or 65 or 70. I'd rather know that I'm not going to lose any money. Don't you think that's more important?
So important.
Yeah.
So what do you think about the market right now? Because we've talked about this, the Magnificent Seven.
Yep.
And how is that going to be affecting people's retirement plans?
It's affecting everything right now. The AI stocks are, I think it's the future, and I think it's a great way to invest. And I do not think they're going to be coming off of their CapEx, it's called, how much money they're spending to invest in AI. Because, I was watching this show. I watch all the financial shows when I have nothing to do, which is rare. But when I have nothing to do, I watch a lot of these shows. And they were talking about how if we're not in charge of what's going to happen with AI in this country, then China is going to take over. They emulate everything we do, and they steal all of our ideas, right? So they're going to try to be the leader in AI with these robots and everything. So it's going to be important for you to invest as an investor and an American to invest in some of these companies. Of course, I have some of these stocks, but you got to be careful because there can't be 7 leaders. They may all do something different, but do you know what a moat is?
Like a castle?
Yeah, a castle, and a moat goes around it, and you have alligators in it, or you have a bridge that you can't get through because you have guards there. Well, that's a moat. And a moat basically protects your business. And what that means is that if you have a company you're investing in and they don't have a moat, they don't have a unique idea that cannot be infiltrated by anybody else, you have a very good investment. So my point is, if everybody's just doing regular AI, who knows how good they're going to be, right? Now, Meta, of course, will be a great leader. Microsoft, they're a software company. They're going to be a great leader. But then you get these little guys out there just, plugging along, and they're trying to be the AI leader. And you're going to see a lot of companies go down. So be very, very careful with your money.
Fidelity was talking about, they get a lot of questions about if AI is going to be a bubble, like the .com bubble.
Well, that's why the market's doing so terrible right now. Exactly that. And you got this guy from the movie The Big Short, the original guy, Michael Burry, and he's been predicting for the last, 6 months that the market's going to crash more because of AI, and it has. And these guys are betting against it so that they make money. That's how this. There's more money made when the market goes down than when it goes up. Now, of course, there's an argument that you can make just as much money, but I feel that you can make more money when the market goes down because they're betting negatively against it. So they're influencing. Today, I've never seen so much influence in the market as there is today. President Trump is doing a lot of things right, and he says a lot of things. And the market gets influenced by what he says, by Jerome Powell says, the chairman of the Fed. So there's so many conditions today that can affect the market. You just have to be on top of it. And which way is it going to go? It depends on which way the wind's blowing, honestly,
So you can't just let it sail. You've got to adjust when the time is right.
Yeah. The reason I just want to reiterate a couple things on the show today. Number one, the reason we're talking about these rates is this is very important. If you have money sitting on the sidelines doing nothing, or you're going to have a CD renewal, or that high yield savings that you thought you were going to get 5.5% again isn't going to give it to you, and they're going to give you 3%. Now is the time to consider what we do, which is fixed annuities. We were talking about this yesterday in our meeting, and we said, look, it's time to show our clients and new people that we can get you 5.75%, maybe even 6%. There's a couple of companies out there right now that are giving over 6%. We have to check the company out. We vet the company. We make sure that it's going to work for me and the clients, right? But we have products out there that can help clients with rates. And if you aren't so happy and you're worried about the market with your 401k, we have products that can turn into income for you, protect your money, guarantee you income for the rest of your life, and have money that you cannot live. That's a big deal. And that's what we do. And I want to emphasize that,
Yeah, you should really finish your working, years on a high note.
Yeah, important. Again, I think anybody out there, start with a copy of my book, Retirement Know-It-All. It doesn't cost you anything. It's free. We send it to you. We have a PDF for people that are so inclined. I guess people still do that.
What I like is you can do Control F and then find whatever you're looking for. So if you want to type in 401k, it'll pull up every single page.
On this?
Yeah, on the PDF.
Really? I didn't know that. There's a lot of stuff I don't know about the
I'll have to show you.
computers and that sort of thing. I want to thank everybody for listening to us, giving us an opportunity to earn their business and show them what we know about this stuff. And that's one of the reasons we're doing these shows, these podcasts. For years I've been doing this, and I always thought I would help people in some manner, and now I'm finding that niche, and I like it. And I like you coming on the show. You've become an amazing co-host, and you really have earned that position. You do a great job, Jenny, and I really thank you for doing that and being, by my side with this and seeing what I've done my whole career.
I've learned from the best. I'm going to continue doing it.
I appreciate that.
I love my job.
All right, cool.
Thanks so much for tuning to the Jupiter Joe Money Show. We'll catch you next time. Go to jupiterjoe.com or give Jupiter Joe a call, 561-743-0999.
Thank you.
See you next time.
All right.